Good morning, traders. It is Monday, the 8th of June, 2015, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The usual rundown of the overnight news. Some key things to note for today's session. Key element ahead of us, Apple's Worldwide Developer Conference 15 is live today. Lots of announcements expected, and given that Apple's such a huge piece of the U.S. equity indices, especially the NASDAQ, and then secondly the S&P, it's important to keep an ear out for news and comments. There are several links on Twitter to watch it live. If you wish to do so, but we are expecting some volatility and some action based on whatever Apple decides to release or comment on. Early comments from a French official from the G7 stating that Obama felt that the dollar was at very strong levels, too strong. This was said to have caused the U.S. dollar to sell off a little bit today. The White House refuted these comments. Final Q1 GDP out of Japan is the best quarter of growth in 2 years. The Japanese market did not really go anywhere on that, since that kind of comment or that kind of outcome creates a conflict. So the market was basically flat today. The FDAX, the German DAX, has officially slipped into correction territory. It's off 10% from the April high. We'll look at that chart in a moment. Looking ahead at today's session, we don't have much. I have a release at 9 Central, 10 Eastern, excuse me. Labor market conditions index, I haven't seen that one before, but other than that, it's pretty clear. And an overnight and continuing through our session, we have multiple ECB speakers. ECB's Constancio spoke at 3 Central. ECB Nowotny spoke at 3 Central as well. ECB's Nowotny is speaking now. Again at a different panel, and an ECB's Mersch is expected to speak at 9 Central, a half hour after the cash open. While we're here, and it's a Monday, we wanted to look at what's ahead for the week. Tomorrow we have Eurozone GDP, U.S. wholesale inventories, and then after market API crude inventories. ECB's Lycanen is expected to speak. Wednesday, UK industrial production, manufacturing production, US monthly budget statement, the Reserve Bank of New Zealand's rate decision, and then ECB's Lycanen again, and then the Reserve Bank of Australia Governor Stevens speaking as well. Thursday, Australian employment change, Chinese retail sales, industrial production, US retail sales, initial claims, and EIA natural gas. Forgot Wednesday, we have our weekly crude oil. ECB's Lautenschläger speaking as well on Thursday. And on Friday, we have Japanese and Eurozone industrial production, US PPI final demand, and US University of Michigan. Fairly light week ahead. Let's switch gears and look at the market itself. On Friday, we had our non-farm payrolls figure, and then we opened. The expectation was for some responsive buying towards that 2099 quarter. And then the expectation was for a test of 2083, that monthly LVN. What it did is it pushed to 2095, 50, and then we had an immediate push down to 86, pull back to VWAP at 90, and then immediately went to 83.50, just 2 ticks ahead of the target. Have you noticed the theme for the last couple of weeks of everything stopping two ticks ahead of the target? And then we rotated back up and through. This looked like it was likely to be a pullback and a continuation lower. It did not. Looks like the continuation already happened to 83.50, and then the market returned back into Thursday's range and basically was range bound sideways. It did ultimately hit the 2099 quarter in the late morning. But overall, pretty muted day, normal variation day, not much to glean from the profile, not much to glean from the session overall, except that the point of control is completely in line with the prior day, 93.75 versus 93 even. Market still balancing. However, if we look at the bigger picture, just zoom out a bit. If we look at the bigger picture, we see that the points of control have been pretty much sideways. They have not shifted much more than a couple points. And then Thursday, it dropped below our balance. And on Friday, it continued to hold below our balance, showing price acceptance down at these prices. So to me, this looks like it's likely to continue lower. It's likely to continue lower as it does this balance sideways to downward push. So this morning, given that it's the day after non-farm payrolls, these days are generally pretty quiet. Positions have already been taken into the market based on the unemployment numbers and non-farm payrolls. So to me, this seems like it would be a pretty quiet day. So this is another one of those days. This is more of like a summer day, where the expectation is for it to potentially rotate up. My primary expectation is for it to rotate up and start to attempt to push towards that 2093.75 where balance is. If we look at the overnight session, nothing was accomplished overnight. Very, very Gaussian profile. The market just sat basically in between 2092 and 2089 and did nothing. Just a lot of noise even through the European session. So still inside of Friday's range. The skews to the downside. Overnight inventory is slightly to the downside. The expectation is for this to rotate up, trade through this range, and touch 2093, but overall expecting it to be a fairly quiet morning. A good day to chill, update homework, update your research stats, things like that. You need sniper patience and sniper precision on days like today. You just need to sit it through and relax and wait for things to set up as opposed to trying to make things happen or reading into the market. If you find yourself moving into a lower time frame, for example, if you use a 3-minute bar chart or a 5,000 volume chart or a 700 tick chart or whatever it is on whatever product you're using, and all of a sudden you're cutting that in half or you're bringing it way down, you're probably in a state where you're inventing trades. And this is the kind of day that lures us into doing that, where we're looking for trades to happen and we're looking to invent trades. Overall, I expect the market to to pull back to 2112 and a quarter, the prior MCV at some point. So if today works out the way I'd love to see it happen, is to push the overnight high, get to 93.75, and then start to work its way up to 2112. But I just doubt that it'll do that. Days after non-farm payrolls, the Mondays are very, very quiet usually. So again, patience is in order today. A quick scan of the market. Here I want to show you the DAX. The DAX is in a corrective move. So it has had this big impulsive move, a pullback, completion or continuation or expansion move, and then it's pulled back deep, lower high, and it looks like an ABC kind of correction here. The target in the DAX is 10.848, 10.845. Those are the key levels below us. That's an LVN combined with a 50% pullback of the entire move up. The Euro Stoxx holding its own so far, but basically in the same shape. The Euro Stoxx looks a little bit more steady than the DAX, still holding this upper balance area, but it looks like it's likely to start moving towards that 3042, 3420, 3410 area below. That's the next balance zone. Looking at the notes, the U.S. 10-year notes, we've had our drop, and so we've had this impulsive move down, and this looks like the extension move here. It has hit a lot of naked points of control, basically repairing some of the structure in the past. Still seeing an attraction here to 124.17, expecting this to be sideways today and probably into the next couple of days. Not much driving the market right now. The U.S. dollar, here's what's happening with the U.S. dollar. It opened, and then on comments, it has dropped, tried to recover, and is continuing to drop now. So we see the opposite move in the euro. The euro strong off the open, pulls back, almost gets to the point of control, and then now has moved through this thin zone that was put in because of the non-farm payrolls, and is heading back towards where it was balanced before. Target for the euro is 112.65 or so, 112.65, where the last value area was. That's all I had for you for today. I've used up my time. Hopefully you are learning to just follow the same pattern, the same process day in, day out, day in, day out. It's very important to have a routine that you do not veer from. That does not mean it has to be cast in stone. It can be modified, but you have to have the same process every day. Following the same process every day causes, in my opinion, a high measure of consistency, and it allows you to catch areas that have changed and the results that have changed from it. So follow the same routine. We're all about habits. Traders are like soldiers or high performance athletes. We follow the same process. When a basketball player is about to shoot a free throw, they follow the same number of dribbles, they follow the same motions, and then they shoot. It's very important to have that in your trading style. Habits breed consistency, in my opinion. That's where talent comes from, is the repetition of habit day in, day out. Good luck today, and I'll catch you later.